Hello everyone, this is Haralambos Pissouros, Senior Technical Analyst here at IronFX Global, bringing you the technical updates for July 15th. Today let's see the technical picture of sterling yen ahead of the UK employment report for May, and the outlook of Aussie dollar, which rebounded after China's better than expected GDP data for the second quarter. So let's start with the sterling yen currency pair. Sterling yen continued to trade higher on Tuesday and now is headed towards the 193.60 resistance obstacle. As long as the pair is trading above the prior downtrend line and above the short-term uptrend line, I would consider the short-term picture to stay positive. Decisive break above the 193.60 barrier is likely to set the stage for extensions towards our next hurdle of 194.60. Today we get the UK employment data for May, and expectations are for average weekly earnings to have accelerated. So this could be the trigger for the aforementioned break. Our short-term oscillators detect strong upside speed and support the notion as well. The RSI continued higher and just poked its nose above its 70 line, while the MACD stands above both its 0 and trigger line and also points north. On the daily chart, I see that the rate surged after hitting the 185 psychological zone, which stands pretty close to the 50% retracement level of the 14th of April until the 24th of June rally. In my opinion, this is a sign that the 24th of June until the 8th of July decline was just a corrective phase, and that the longer term uptrend is gearing up again. Now let's continue with Aussie dollar. This pair traded higher during the Asian morning today, following the better than expected GDP data from China. Looking at our short-term oscillators, I see signs that the rebound could continue, perhaps even above the psychological zone of 0.75. The RSI rebounded from near its 50 line, while the MACD stands above its trigger line and is headed towards its 0 line. It could obtain a positive sign soon. What is more, there is positive divergence between both these indicators and the price action. A clear move above the 0.75 barrier could initially target the next resistance at 0.7535, while another move above 0.7535 could pave the way for the 0.7585 line. On the daily chart, the completion of a head and shoulders formation and the move below the psychological zone of 0.75 signaled the continuation of the prevailing longer term downtrend. As a result, I would treat any further short-term advances as a corrective move of that long-term downside path. So that's it for today. For more analysis and charts, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Haralambos Pissouros, Senior Technical Analyst at IronFX Global, wishing you solid trading.